Hello everyone, welcome to the channel again. André Cardoso here. I hope you had a nice trading week, at least until now. Of course, we have a couple of days remaining for the week, and I have a couple of pairs to share with you, a couple of patterns. This is my purple list for today. Let's start with the Dixie, because some of you already know that also influences some of other, specifically some of the majors in the Forex market. So let's talk about the eventual moves for the Dixie now that we are threatening the violation of this fractal resistance. This is a fractal printed last week, 103.96. A violation of this resistance, and this fractal resistance may imply more momentum to the upside for the dollar. That being said, my next pressure zone for the Dixie, it's projected just a couple of points above at 104.62. That's the golden Fibonacci extension level. I will not be surprised to see that level offering some pressure for the Dixie after breaking above this fractal, and the formation of that crab pattern may also suggest then the pullback, a retracement, and that retracement may also find support, of course, at the previous structure resistance, which means this bearish crab pattern may force a retest of the broken support, and then we will see how the market behave. But I will not be surprised to see more upside momentum for the Dixie. If that happens, we will start to track the one eventual channel, or one eventual ascending channel that may start to emerge for the Dixie. But first of all, it's a step-by-step process. First of all, we are now threatening the resistance, which may imply that momentum to the upside. Of course, the market can trade much higher without feeling pressure at this point. Of course, I'm expecting that to happen, but the market may not feel that pressure at this zone. And if that is the case, we will pay attention to the potential or the eventual retest of this fractal resistance, 105.63, and the eventual formation of a pattern extended at the 113% Fibonacci extension, projected at 106.25. The reason why I'm calling your attention to this pattern, of course, we are far away from the completion of this pattern at that level, or at those levels. But one of the reasons why I'm calling your attention to that pattern is because the ratios that we have, the Fibonacci variables, may suggest that pattern formation later, but also because there's confluence between the measured 38% Fibonacci retracement. So this is a Fibonacci retracement from the previous highs and monthly fractal 114.77 to the daily fractal support at 182. So this is a retracement. This is a very first Fibonacci retracement level, projected a few points above the previous fractal resistance. For that reason, I will pay attention to this pattern formation, which may offer a very nice reaction to the downside if completed. So for now, as I said, pay attention to the potential breakout of the resistance. It's a simple strategy. The breakout of a fractal may always suggest a move above it, and of course later we will pay attention to the eventual retest of this resistance, turn it into a support level, and then more upside momentum will be expected. The pound, of course, if the Dixie starts to trade higher, we may see the dollar-related pairs and the majors starting to trade lower, specifically the cable, the euro, the kiwi, the Aussie. All of them should trade lower, inverted with the Dixie. Some of them with higher correlations, as euro versus dollar and the CHF, other with less correlations, but they all should trade in the same direction, and share the same momentum, let's say. And if that happens, of course, we will pay attention to the eventual breakout of this fractal support for the cable, the previous lows. We are already very similar as the Dixie. We are already threatening the violation of the recent daily fractal support, 120.30 exactly. and a violation of this support will open the door or may help the formation of the shark pattern, also projected at the golden Fibonacci level above the previous highs and structure support, major support level right there. And if that pattern completes, we may expect a bounce after the completion. So in very much the same, the formation of the pattern may imply or suggest a bounce usually towards the 50% Fibonacci level. So we need to measure after the formation of the pattern, we need to pick your retracement tool and measure and find the 50% retracement level, and that may imply a move back to 120.76 after the formation of the pattern. So we need to see that pattern being formed, and as you can see, that pattern formation also suggests a recovery of this fractal again, or at least a retest of that previous structure support again for the cable. Step by step, violation of the support, we see we are now rejecting the previous lows. We saw one first violation of the fractal, we saw the cable starting to recover and rejecting the previous lows again. The previous support, it's now resistance on a lower time frame event. If you go into a 30 minutes time frame, it's even better. You can see this very dark and bearish candle right there. Previous structure support is now resistance. The cable should start to trade lower. So that being said, if that happens, you should pay attention also to this bullish crab pattern, shark pattern projected at 118.83. As I said, we may expect a reaction after that. Moving forward, Aussie, very much the same pattern. I shared a couple of these patterns before with you, specifically the bullish shark pattern at 68.75, right there at the golden Fibonacci extension level. Then the price unfolds into an inverted head and shoulders formation. We saw the breakout of the next zone or the resistance of these heads and shoulders, triggering this momentum to the upside. Then we saw also these potential false breakouts above. So we have these recent highs, new higher highs above the previous fractal, daily fractal resistance, by the way. A false breakout of the fractal forced, actually confirmed now after the breakout of this support. So we do expect the same reaction after the confirmation of a false breakout above. We need to see, we expect to see the golden Fibonacci extension acting as a next pressure element. So basically, after identifying the false breakout above, I always search for an extension of the last swing high to the golden Fibonacci level, and that points to 68.03. That completes also another bullish shark pattern very similar to the one printed above. So that's what I do expect for the Australian dollar. Also, the golden Fibonacci may also offer some pressure, completing the bullish shark pattern. Of course, the Kiwi, the same pattern, not the same pattern, but very much the same expectancy. So I still expect more downside for the Kiwi, but this is the bullish crab pattern and not the shark pattern. It makes difference because we don't have a false breakout above the resistance. We may call this, it's almost kind of a double top configuration right there, and then we are seeing now the breakout of this fractal support, this daily fractal happening at this point at 62, or position at 62.70. So if that confirms, I do expect more bearish momentum for the Kiwi, and I will point to this bullish crab pattern projected at 61.97, and very much the same as I do expect for the shark patterns that I showed you before. I do expect a reaction for the Kiwi, probably testing the previous structure support again. which should be equivalent to a 38% Fibonacci level. Let's measure that. For some reason I don't have these Fibonaccis here, and as we can see, it points to the previous structure. Actually, it nails the previous structure in fractal support. The formation of the crab pattern at the golden Fibonacci will suggest a bounce back to the previous structure support level. 38% Fibonacci retracement of all these move to the downside. So pay attention also to this crab pattern for the Aussie. For the Kiwi, I'm sorry. Aussie versus the New Zealand, there's one eventual double top. This is not a technical double top, this is a double top. As you can see, we have kind of a V shape. We have a retest of the previous highs, and we need to wait for a clear violation of the fractal support. This is the next zone for the double bottom, or for the double top, I'm sorry. And of course, the breakout of these levels will suggest and imply a move towards the 200% Fibonacci extension level, which is now projected at 108.47. If that happens, I will start to track the possible the possibility to form this bullish crab pattern also at the golden Fibonacci extension level, and that points to 107.74. So that's the golden Fibonacci extension of the last swing high, this last swing high. That being said, it's also a bullish crab pattern for the Aussie versus the New Zealand, but of course, step by step, double top right there. Watch out the violation of the support. As you can see, we are also approaching this previous structure support level. Let me just track this conveniently. We have this potential trend line support holding the previous lows since December last year. So from the beginning of the year, we have seen the Aussie versus the New Zealand trading at higher prices. And that being said, inside this bullish momentum, and that being said, pay attention to the breakout of these elements, which may let's say increase with the probability of a move to the downside towards those levels that I show you here. Dollar versus the CHF, attention to the breakout of the resistance, very similar with the Dixie. The breakout of this resistance will imply more, or should imply more upside momentum. I'm waiting to see that violation of the resistance, because it also triggers this edge and shoulders pattern formation that I shared before with you, and we can start to track this pattern on a higher degree scale, let's say. And that being said, that points to 94.62, and that points to the previous weekly fractal support, which I need to adjust those levels at the end of this week, by the way. But for now, I'm paying attention to the eventual breakout of the resistance position at 91.92. After the formation of this fractal right there, a week ago, I projected this chart with you, expecting the eventual formation of the right shoulder. We never know if the price will react to those patterns that we expect the price to form, but it looks like it's reacting fine according to my default or my initial expectations. At least I see this as a potential inverted edge and shoulders pattern formation, and the clear breakout of the resistance may suggest more upside momentum. I have other patterns that may start to emerge at this golden Fibonacci level, specifically this higher degree bearish shark pattern. That pattern may also imply a retracement after the formation, but we can also start to track other lower degree events, specifically taking into consideration this last swing low. If I measure this last swing low and I search for the golden Fibonacci above, that Fibonacci level may offer me some pressure. That is also the completion point for the shark patterns, the golden Fibonacci, the 161 and the 224% Fibonacci level. So that being said, we have shark patterns projected at 93.31, or let's say between 93.33 and the previous fractal resistance at 94.07. Of course, if you ask me for the one that I want to trade, I prefer, of course, to wait for the one extended at 224% Fibonacci extension, because in this situation it may offer me much better risk reward, taking into consideration the previous fractal resistance. And also, of course, as I said and as I shared with you, if you take both of these patterns into consideration and create a range to search for an opportunity to trade lower, even better. So you can create a range between the previous structure and fractal resistance and the golden Fibonacci a few points above, or even the 200% Fibonacci extension, which is the default target for the inverted edge and shoulder. So you can try to play inside this range in order to search for an opportunity to trade lower. Of course, that's an alternative way to trade. You can always put a pending order, a limit order, to push a trade automatically once the price achieves or completes that pattern or that sequence. This one, the golden Fibonacci level right there, or the ones above. You can use multiple ways to trade the patterns, with a pending order, a market price order, whatever you need, whatever you feel comfortable with. So that being said, pay attention to breakouts above the resistance and those levels above, specifically the potential retest of the weekly fractal resistance, and then later, if the price approaches this price zone again, we will be tracking these eventual patterns. So we will be here sharing those possibilities with you for sure. But pay attention to these daily fractal resistance, which may suggest, after the violation of the fractal or breakout above it, it may suggest more upside momentum for the CHF. The dollar versus the Canadian, we have this descending channel, but we have also, we can see this in a 2 hours time frame. I have also a bearish alt-bat pattern projected at new higher highs for the Canadian dollar at 34.98. Of course, that will put the price, that pattern formation will put the price very close to the highs of this descending channel resistance, and I will pay attention to that pattern also. I'm not searching for opportunities for the upside. I admit more momentum to the upside after the breakout of this fractal resistance. I admit that, and I'm tracking that possibility to form that pattern, but I'm not saying there's no edge to trade in that direction at this point. I admit that the violation of the fractals and the support levels may trigger some momentum upside or downside, but that doesn't offer me an edge, So that being said, I prefer to wait for the rally, and I will pay attention to this price zone once the price approaches, or to these patterns once the price approaches these zones. Canadian dollar. And then let's finish the Forex with euro versus the Australian dollar. This is also, let's go into a 1 hour time frame chart. This is one of the patterns that I shared today with my subscribers on Discord, and this is of course just one of the examples of the last 130 trades that I suggested, or trade opinions or patterns that I shared there. This is just one of them, and this is the bearish. This is an example of the bearish shark pattern in the same process over and over and over again. I can't get tired to repeat that process. You have the previous structural lows, we have the false breakout of the previous lows, false breakout of the support, confirmed after the violation of the resistance, and then the price finds the golden Fibonacci level as element of pressure, forming resistance right there. After the formation of this sequence, I do not expect nothing more than a 50% retracement back to 154.52. So this is where I think the market may find support later after the formation of the pattern. That same sequence, if the price achieves the default target zone, that also completes the bullish 5-0 sequence, which means I will not be surprised to see a bounce after the price, or if the price hits the 50% retracement. We are talking about the shark pattern followed by the bullish 5-0 sequence. We have the bearish shark pattern and the bullish 5-0 sequence makes part of the shark pattern if that pattern achieves the default target zone. Okay, so if you see a shark pattern starting to move in the expected direction, do not get surprised with at some point the market may find some support, and in this case usually we track the 50% Fibonacci retracement because historical data has proved that usually the price uses, or the crab or the shark pattern uses the 50% Fibonacci retracement as potential elements of pressure, in this case for support. Let's finish with crude oil, and one of the patterns that I'm tracking for crude oil, we can remain these in a 1 hour time frame. First of all, look how it has been capable to hold above this 200 moving average for now. So it may take some time to complete this pattern. We don't know if the price will complete the pattern, and by the way, we don't know the outcome. We expect the outcome, as I said before, based on historical data, but we don't know if this is the time where the market will respect the pattern. Okay, that being said, I'm tracking the eventual shark pattern, but this one I will track this one at 224% Fibonacci extension. And the reason why, it's because it points also to the major 61.8% Fibonacci retracement level, and I want to search for a reaction once crude oil achieves this convergence or confluence box or cluster box between those Fibonacci levels. So this is what I have for the crude oil. We are now threatening the support at 77.59. And I'm waiting to see if crude oil will be capable to trade just a few points lower, and eventually just to complete this pattern for me, and 75.73. That's where the pattern completes, and as I said multiple times, and right before this chart, if the price completes the shark pattern at 224, I will expect the same reaction, the 50% retracement back to 78.14. That represents a move similar to 3% above my entry, which allows me to play with a 1-2 risk reward approach. That forces me to put the price as a 1.5. I can give them a couple of more points for spreads and commissions and all that stuff. 1.6 versus 3.2. So this is one of the examples I can use to try to trade the shark pattern. Usually at the 224% Fibonacci extension, the market does not require a lot of room to trade and to react. I think this is a bad example, because I think this is too much for that shark pattern, because that will put your stops very close to the 78.6. Probably you want to use a friendly risk reward approach if you want to try it. Even though, so this is the bullish shark pattern for crude oil at 75.73. I'm waiting to see the formation of that pattern also for crude oil. So that being said, I hope that information brings some value for your journey, and of course I will be here next days. Probably next Friday I will be here covering the week with the next video, and I hope of course that brings some value for you for your journey, as I said, and safe trades for all of you. Don't try to rush and anticipate, wait for your levels, have full control of your risk, and have a nice day for everyone. See you there.